Let's face it, the world of investing is changing. It's evolving at a pace we've never seen before. Gone are the days of relying solely on stocks and bonds. The traditional methods that once seemed infallible are now being questioned. Savvy investors are looking for something different. They are seeking new avenues, exploring uncharted territories. They want something real, something they can touch. They want tangible assets. These assets provide a sense of security, a physical presence that paper assets simply can't offer. For years, we've been told to invest in paper assets. Stocks, bonds, mutual funds, these were the pillars of our investment strategies. We put our faith in companies, in governments, in promises. We believed in the stability of these institutions. But what happens when that faith is shaken? When the markets become unpredictable and the stability we once trusted begins to crumble? What happens when inflation eats away at our savings and currencies become as volatile as the weather? The value of our investments can erode overnight. It's time to rethink our approach. We need to adapt to the changing landscape and find new ways to secure our financial future. It's time to build a portfolio that can weather any storm. A portfolio that includes tangible assets, real estate, gold, commodities, things that hold intrinsic value. It's time to invest in tangible assets. These are the investments that can provide stability and security in an uncertain world. The ground is shifting, and we must shift with it.
Inflation is a thief. It silently creeps into our lives, diminishing the purchasing power of our money without us even realizing it. It slowly erodes the value of our hard-earned money. Over time, the same amount of money buys fewer goods and services, making it harder to maintain our standard of living. What we could buy yesterday costs more today. Everyday essentials like groceries, gas, and utilities become more expensive, stretching our budgets thinner and thinner. This is especially true for those holding large amounts of cash or relying solely on fixed income investments. Retirees and savers often feel the pinch the most, as their fixed incomes struggle to keep pace with rising costs. This is where tangible assets shine. Unlike cash, tangible assets like real estate, commodities, and infrastructure projects have intrinsic value that can withstand the test of time. Real estate, commodities, infrastructure, these things have intrinsic value. They are not just numbers on a screen. They are physical, valuable resources that people need and use every day. They are essential to our lives, and their value tends to rise with inflation. As the cost of living increases, so does the value of these tangible assets, providing a buffer against the eroding effects of inflation. In fact, they can act as a hedge against inflation, protecting your portfolio from its erosive effects. By diversifying your investments to include tangible assets, you can safeguard your wealth and ensure it grows over time. Don't let inflation steal your wealth. Take proactive steps to protect your financial future by investing in assets that hold their value and grow with inflation. It's time to fight back with tangible assets. Secure your financial future and build a resilient portfolio that can weather the storm of inflation.
Real estate is a cornerstone of any strong investment portfolio. It's a tangible asset you can see and touch. It provides shelter, it can generate income, and it tends to appreciate in value over time. Think about it. People will always need a place to live. This constant demand makes real estate a relatively stable investment. Plus, rental income can provide a steady stream of cash flow, further enhancing your returns. Real estate is a proven way to build wealth. It's a tangible asset that can provide both security and peace of mind.
Section 4. Commodities and infrastructure. The backbone of a strong portfolio. These elements are not just financial assets, they are the very foundation upon which our modern economies are built. Commodities and infrastructure represent the building blocks of our modern world. They are the essential components that drive economic growth and stability. Without them, our cities would not function, and our industries would come to a halt. From the food we eat to the roads we drive on, these assets are essential to our daily lives. Imagine a world without the infrastructure that supports our daily commute, or the commodities that fill our grocery stores. It's almost impossible to envision. Gold, silver, oil, copper, these commodities have inherent value. They are not just traded for profit, they are integral to various industries, from technology to energy. Gold and silver are not only precious metals but also critical in electronics and medical devices. They are used in countless products and industries. Copper, for instance, is essential in electrical wiring and plumbing, while oil is the lifeblood of transportation and manufacturing. These commodities are the raw materials that keep our world running. As the global population grows and demand increases, so too does the value of these finite resources. The scarcity of these resources makes them even more valuable over time. Investing in commodities is not just about capitalizing on current demand, but also about securing future growth. Infrastructure such as roads, bridges, and utilities is also crucial. These are the arteries and veins of our economies, facilitating the flow of goods, services, and people. Without robust infrastructure, economic activities would be severely hampered. These assets support our economies and societies. They enable businesses to operate efficiently and communities to thrive. Investing in infrastructure is investing in the backbone of our daily lives. Investing in infrastructure is a bet on the continued growth and development of our world. It is a commitment to building a future where economies can expand and societies can prosper. By investing in these foundational elements, we are ensuring a stable and prosperous future for generations to come.
Section 5. Diversification. Don't put all your eggs in one basket. You've heard it before, and I'll say it again. Diversification is key. Don't put all your eggs in one basket. This is especially true in today's volatile market. By spreading your investments across different asset classes, including tangible assets, you can reduce your overall risk. If one investment performs poorly, others can help to cushion the blow. A well-diversified portfolio should include a mix of stocks, bonds, real estate, commodities, and other tangible assets. This balance will help protect your wealth and ensure long-term growth.
Section 6. Secure your future. Invest in what you can touch. The future of investing is tangible. It's about owning assets that have real-world value. Assets that you can see, touch, and understand. Don't let inflation erode your savings. Don't fall victim to the volatility of the market. Take control of your financial future. Invest in what you can touch. Invest in tangible assets. Subscribe to my channel now for more insights on how to build a strong and resilient investment portfolio.